Hello and welcome to the Trading Zone. I'm Joe Teague, portfolio manager at Equity Armor Investments. Welcome you to the show. Hope everyone had a great weekend. Hope everyone's having a great holiday season. Thanks for checking in today. It's going to be a short week. It should be a light volume week, but should still be very interesting to watch. I think I got a really good show. So hang out for that. For me, I enjoyed some children's birthday parties this weekend. Had a 5-year-old party for my middle child, Abby. It was a lot of fun. Good to see some family. Got to see the Lions win. So great weekend for me. I hope it was just as good for all of you. It'll just be me today. Brian is off on a well-deserved vacation. Checking in there, but yeah. Remember, got any questions, want to hear anything, want to hear about last week's trade, want to talk about anything, make sure to shoot them in. Happy to talk about all of them. Happy to answer any question you have to the best of my ability. If I can't, I'll just let you know that I can't. That's fine too. So remember, I'm Joe Teague. I'm a former options market maker. Spent good time in the VIX pit, trading VIX options and futures. Same with Brian. Now I'm a portfolio manager at Equity Armor Investments, where my goal is to, provide the information I learned as a market maker, offer it to everybody, and make investing a little less risky. And it's gone pretty good so far, of course. So this week we're seeing more mergers coming in. Sometimes that can be a sign in the middle of a bull market, just money flowing around, people thinking of where to get the best return on that money. Definitely access to capital is still very good when you're seeing mergers like this. And a lot of times there was also another one, Nordstrom's, went private too, so it's a different type of a deal. But just a lot of times people are looking at the market. I mean, if you're a crypto firm, if you're an AI something, you're doing quite well. A lot of these mergers are happening in the other spaces, so the market's rewarding the growth area, but the economy is doing quite well. Access to capital is good, so I think that's a good environment for these types of mergers, where valuations on some parts of the market are kind of low. People thinking, hey, there's value to be had elsewhere. So that's what I see with these mergers. Always, this is just part of like a bull market for me. This is just a strong economy. Elsewhere around the financial world, of course, we're talking about the upcoming administration, what's going to happen. Ahead of that, we're seeing trade wars starting to ramp up already, and that's been the push and pull since the election. There's going to be some deregulation. There's going to be, maybe some tax reforms, etc., that will be beneficial. But the flip side is maybe there's going to be some tariffs. Maybe that won't be so good for the economy or markets. So we'll have to wait and see. People are trying to figure that out. And that's why I think it's going to be such a crucial end to the year for trading, for the market. So make sure you stick around to the end of the show. I got a trade idea for the year end, of course, and the start of next year. So we'll talk about all that. But on the flip side of, the tariffs, there's also a great deal of foreign investment coming in. Of course, SoftBank is putting a big chunk of money in here, looking at the AI world, looking at potentially making a new competitor to NVIDIA. We'll see about that. We'll see if this investment even comes to fruition. But it's just a sign people want to spend money in America. They want to put money in America. There's been a lot of talk, a lot of worrying, a lot of angst about all of the economies around the world having some trouble. Canada being one, South America, Brazil being another. Around Europe, you're seeing, the French government, the German government having these issues. What's going on? And for me, that's just another sign that America is doing so well. Money will be coming here if you're seeing problems around the world. So just another reason to be bullish for me. And it's not going to change. I've been saying this for a long time. There are a lot of reasons that the economy should falter. There are a lot of reasons that historically this is when the economy does falter. But for me, the market's not going to change sentiment until the economy does. The economy has been strong. As long as the economy stays strong, the market will do quite well. Maybe we'll see a little bit of warning signs before that happens, but honestly, we haven't seen anything like that. So the economy's strong. The market will be strong. Let's hope it continues next year. I'm open to it changing, and I'm prepared for if it doesn't. So I'm cautiously optimistic. Like I said, remember, I'm going to start the show in just a second. Remember, thanks everyone for joining in. Really, really appreciate it. It means a lot to me that you're here with me every week live. Let me just make sure I got my comments on. Yeah, so I'm here live. I'm happy to answer your questions. You got any questions? Type them in. Happy to answer it. You want to say hi? Just say hi. Don't have to ask a question. Really appreciate it. Anyways, it's really important to me that you're all here. So it feels. Yeah, thank you for being here. I guess is what I'm saying. Anyway, so let's start the show. Welcome to the Trading Zone. I'm Joe Teague for Equity Armor Investments. I am a portfolio manager on the Rational Equity Armor Fund and the Catalyst Hedged Equity Fund. Make sure you check that out. This is the last trading week of the year. Very exciting times. Happy holidays to everybody. We got Christmas coming up. We got Hanukkah coming up, happening at the same time. So that is exciting. Hope everyone's celebrating with their families and enjoying the time. Hopefully the market can give us a little bit of reason for celebration. We had a little bit of pullback last week with the hawkish cut from the Fed, which seems like what they do. When they're dovish, they have a hawkish stance. When they're hawkish, they have a dovish talk. But they cut the interest rates, but they were talking very hawkishly about next year. But let's remember here, the Fed cut last week. Of course, that's kind of dovish, but also the Fed's going to cut again. So the Fed's still cutting. That's into this inflation. Maybe some people think that they shouldn't cut, but they have said that they will be cutting more, and we have strong economic growth. So maybe this is not the best news for inflation, people who are worried about inflation. But when the Fed cut 50 bips in September, they essentially said, we are more concerned about growth. We want to make sure we don't see job losses accelerate than they are that inflation will have a double top or a double dip or whatever the opposite of that is. They're less concerned about inflation. They're more concerned about growth. And that's exactly what we've been getting. So we should remember that. And that should be good for stocks. I know in the short term, it feels bad when you got the dollar railing, you got the interest rates rising. It doesn't feel good on the short term, but in the long term, that's going to be good for stocks. I'm confident if we have a strong economy with interest rates lower, that's going to be good for stocks. We should see the yield curve start to elevate, and we should also see some volatility pick up. Again, not too uncommon. We get to the middle to ending stages of the bull markets. We should see the market railing. We should see volatility picking up. So that's what I am looking forward to for this year. So, of course, we got the year-end happening right now. I got a trade talking about that at the end of the show. Make sure you stick to the end. I'll also be recapping the AVGO trade from a couple weeks ago. So that's what we got going on this week. Not a ton. It's going to be light volume. So a lot can happen. There could be some swings, just like we saw last week. So let's keep an open mind for all of that. In the volatility zone, we got a big uptick in volatility at the end of last week. Of course, huge increase after the Fed. Really, also potentially people were concerned about the debt ceiling or government shutdown, perhaps. Big uptick in the skew here. Not a huge surprise. We're kind of expecting it to kind of bounce off of this level like we had been talking about. It's not a huge surprise for us. And remember, looking kind of at the bigger picture, we're still, we're still in a decent range here. I kind of been anticipating this to be like our levels here for next year, just in there. I think that's going to be where we should expect to see this skew. We got a little bit under, we got a little cheap in volatility there for a minute, but I'm thinking it's going to live in this area. So that's what we'll be expecting. And it's not uncommon to see volatility get a little cheap in December, only to pick back up. Remember, February into March is when we really start to see the volatility start to get on the rise. This is the VIX term structure. This is the futures curves and the spot of the VIX. Currently, we actually have the VIX trading below where above where the future is. A little uncommon. Usually see that on the other side. So maybe futures traders are still thinking volatility suppression into year end. Got 2 holiday days coming up, 2 half days coming up. So a lot of time off. Sometimes that could lead to some volatility suppression, people taking some trading days. We'll see how that plays out, but definitely people expecting in the short term the VIX to come lower. We're basically very flat though on the whole curve. Usually you'll start to see us pick up a little bit where you get a little bit of a slope. Now my mouse is not working so great today. A little bit of a slope. That's what you usually see in this curve. We'll see how that plays out in 2 weeks. I think that's when you should expect to see this back to normal. Remember, I think people will be pricing in some volatility in February at the start of the year, regardless of what happens. Looking at the S&P 500 trends, boy, we had a nice pullback last week right to this trend line. What a perfect spot to come to. Fantastic bounce there. Not a lot of action today. Again, light volume. So we'll see if we can hold here. Obviously, the worry here is to see, my mouse, if it could just work. The worry here would be to see as we get the head and shoulders top. That would not be good. Very possible that happens. So I'm looking out for that. But, it's very possible we can just keep on trucking here. That's plan A. If that can happen, that'd be the best. But we're open for this possibility too. NASDAQ did something very similar. Found this support, rallied there. Honestly, this looks a little bit better. Better formation here. Hopefully, this can be the one that takes us to new highs. And we really want to see technology leading the way. That's what happened this year when we saw, basically a fantastic year. Any way you look at it from the stock market, 20% returns is great. We saw tech leading the way, things like Meta off and running at the start of the year. So we're hoping for more of that. This is semiconductors having a nice bounce today. This is actually up around here right now. So really good bounce here. AVGO was great. Some things were not so great. People were really concerned about NVIDIA. I think it was great that NVIDIA did not roll over when people were looking at it, thinking that it would. So I think this is going to be something that I want to trade into year end. I'll be talking about this at the end of the show, which is coming up soon. I got a shorter show today for the holiday week. But yeah, I'll be trading the SMH in just a second. But I just want to recap this AVGO trade. Boy, this thing took off. Of course, came back down here. And this was a trade 2 weeks ago. We did the 175, 210 call spread, sold the 160 put. That was for 70 cents. Turned into $22 last week. And that was when it was at 245. Today, it's all the way back down to 230. And it's only down $2 on this trade. So you can see it's down $15 on the stock price. This trade is only $2 against me because, of course, it was in the money, the call spread. And that's what I said I wanted to do on this trade was to let it breathe a little bit, hopefully get it to come pull back, and then look to roll up the call spread. Right now, these 210 calls are about $41 on these calls for me. So I'm just looking out to roll it up. I'd love to collect even more money and raise that call spike to continue this trade for me. So I'll be watching for that. Not a lot of time has passed, obviously. We just had another week pass. Not a lot of decay has happened on basically it's the 210 puts I need to decay right now. So I'm looking for those to decay. If we can maybe get another week or two of decay, then I'll be looking at, selling a different call spread, probably like the 250, 245 calls out in September or December. That's what I'd be looking to add to this trade. Just give me a little more upside potential, maybe collecting a little bit more, lowering my break even here, my cost basis, because essentially I paid 175 here for AVGO, which is up at 235ish right now. So it's a decent winner. Obviously, I just want to make it even better because it's going our way, and not really having a lot of risk on it either. So I think that's a fantastic trade. So, anyways, back to my trade of the week for this week. We're looking at the Santa Claus rally, and people think about the Santa Claus rally into Santa Claus. I actually think the most important time of the year is after Christmas to the start of the year. Now, why for me is that so important is that there's a lot of tax maneuvering going on at the end of the year and the start of the year. So there's a lot of selling pressure, in other words, and if you can fight that selling pressure and have a positive trend over that time period, I think it bodes very well for the new year. People are looking to sell some losers at the end of the year, get those losses in on the books so they can pay fewer taxes this year. And then on the flip side, after the start of the year, people have been holding on to some gains, not wanting taxes in this calendar year, want to push them forward a year later to sell them at the start of the next year, raise some capital and find something new to put it into. That's why it's such a crucial day. There's a little bit of maneuvering going on, but if we can fight that trend of this tax selling and have a positive outcome over that time period, it really bodes well for the stock market. That's exactly what we saw this year. In a lot of positive years, you have really good performance over that time period. And I think we've really been coiled up and poised here for the semiconductors. This is semiconductors, not Bitcoin. Sorry about that. If you really poised for a nice little victory here, and I'd love to see it happen. Right now, we're back up here at 245. If we can have a nice little bounce here, I would love to see it. So here is the trade. Very simple. The first week of January expiring next Friday. The 245, 260 call spread. That's 495. It's actually already 247 right now. So it's already $2 in the money. I need about another 1% upside move for this to be a profitable trade. And then I'm going to make money all the way up to 260, which would be about 4.5% return for 2 weeks. I think if we do get a Santa Claus bounce or a boon, that will be decent enough for me. And again, just a 1% rally is all I need for it to be in the money. So it's not risking too much here to have a solid return, basically 2-to-1 payout on my money. And that's going to be all I have for today. Really quick show. Thank you so much, everybody, for joining in. It means a lot that you're here. It means a lot to me that you're here. It's been a fun time trading. Actually, I guess we still got one more trade to go this year. So this will be the last show before the holidays. So Merry Christmas and Happy Hanukkah. And hope everyone celebrates responsibly and has a good couple days of relaxation with family. And we'll be back next week. And then we're going to start it over again in 2025. It's going to be a great year. I can't wait for it to start. And I'm excited that you're here with me on the ride. And it's been a fun time. So I'll catch you next week. Have a great week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.